1140 The Fan. Talkin Money.
Well, alrighty then. We're back to Talkin Money with Jeff Tarbell.
All right. 339-1140, 1-800-920-1140 if you want to jump in, or you can text us at 44-1140. The number one movie of all time came out, and it was, yes, The Avengers. Made how many millions of dollars?
$200.3 million.
Jeez. I thought like Harry Potter was like unbeatable or something. So
yeah, Harry Potter was at $169.2 million. Then The Dark Knight, The Hunger Games, and Spider-Man 3.
All right. So we're going to continue on real quick so we don't take up all of Fred's day. Fred, is it Krieger? Did I pronounce that right, Fred?
Yeah, Krieger.
Krieger, thank you. Is the president-elect and vice president of government affairs for CAMP, California Association of Mortgage Professionals. And I told Fred during the week, I said, I don't want to make this an inside the belt loop discussion about my complaints on the origination side. Let's talk a little bit about what is going on and what is being proposed either nationally or locally, statewide, for consumer protection. And I think the biggest one that has those of us in the industry kind of on guard a little bit is this Consumer Finance Protection Bureau. So, Fred, maybe just in the Reader's Digest version, what is this group supposed to do, and how is the mortgage consumer supposed to be benefited by CFPB?
Sure. So the CFPB, or the Consumer Financial Protection Bureau, was basically set up through the Dodd-Frank Act that was passed basically and put into effect last year. And in essence, what it's supposed to do is actually protect the consumer, and anything dealing with lending in the United States falls under this new regulator. Now, in the past, you did have a number of regulators that would attack or control or oversee, or however you want to put it, the lending institutions, whether it's car loans, student loans, credit cards, mortgages, etc. So basically what the Dodd-Frank Act in essence did is actually put all these new regulators under this new bureau, which is the CFPB. And it's interesting. Good, bad, and ugly. I think at the end of the day, the bureau will still be there regardless of which side of the aisle is going to control both the House, Senate, and the White House next year. Is that I think this is in essence what we call institutionalized, or in essence that this bureau will not be repealed regardless of who's in power. And so at the end of the day, really what the CFPB is trying to do is really be the advocate on behalf of the consumer to make sure that they're protected, to make sure that at the end of the day that they're not taken advantage of, and make sure things are fair. Now, that's the good. The bad news is, unfortunately, with anything else, the coined phrase, unfortunately, over the last couple of years has been what's called unintended consequences.
Right.
So there are going to be new rules and regulations that are put out, and unfortunately, those of us who have participated in government advocacy on the behalf know that governments are a pendulum. It swings one side or it swings to the other. There's never a middle ground. And so, the new rules that are coming out, our association, the number of associations across the country are advocating to ensure that, at the end of the day, the consumer is not harmed. And, all best intentions may be good, but realistically sometimes is that, the consumer is caught up in some of the turmoil that gets passed on. And unfortunately, what was intended to help them actually ends up hurting them. So there's a couple actually rules that are coming out. I mean, one of the good parts right now is those of the listeners right now who have ever refinanced or purchased a home have seen what's called a good faith estimate.
Right.
And when you look at it, back in the early days, it used to be one page, used to be kind of clear about, what your closing costs were, how much you had to come in with, what, the individual costs were. And unfortunately, it's been turned to a 4-page document that doesn't explain anything.
Right. So now we come up with another document to give you with the new government created good faith estimate, which is 4 pages. It doesn't really say anything. We have to give you a little cheat sheet on the side that says this is what it really says. This is how the numbers really are, so you can interpret what the government related document is supposed to be telling you.
Exactly. The good part about the CFPB is actually looking at consolidating a couple of those forms into one easy form. They've actually done a great job over the last year going out to consumers, going out to industry professionals and asking their opinion, which is great because they're getting some good feedback and input. And so we should probably be seeing a new form come out probably within the next 12 months that we hope is obviously, better clearly defined of what a true consumer's closing costs are, how much they're supposed to come in with, what their monthly payment is, and clearly goes over all the true closing costs of that transaction.
So the one that seems to have the most legs to it, because I've got probably half a dozen articles here, and I alluded to it earlier in the show, was one of the rules that changed in the past with the the good faith estimate was if there's a tolerance, which basically means if a lender tells you your loan's going to cost you X numbers of dollars in different categories. Some categories cannot change at all. If they tell you, our bank fees are $1,500, then that cannot change at close of escrow. And some of the title and escrow fees are estimates; they can vary a little bit depending on who you use. And I think that's good because historically people would get to title, and the lender would try to slam them with a different rate and a different cost, and it was just a black eye on our industry. So that change I like. But the one that I think that is coming down the pike, and Fred, you can jump on it, is this kind of this limit of fee or a flat fee kind of a concept, which is saying, lenders can no longer be compensated differently for a $100,000 loan as they are a $300,000 loan. They need to have a fee that's straight across the board. And my guess is that sounds good to someone on the surface, but if you're someone who's trying to borrow $75,000 to $100,000, you may not get a loan going down the road.
Right. Unfortunately, this was released late Wednesday night with the CFPB. They issued some new rules that they want to take a look at and get input on. And under this flat fee, again, what I mentioned and alluded to before was this unintended consequence. So again, if our industry is basically succumb to a flat fee charge to every consumer, it's fine and dandy for loans that, $300,000, $400,000, et cetera. But for those loans that are, say, $100,000 or less, and in this day and age, there are a lot of communities that falls into.
Right.
Unfortunately, they will not be able to get a loan. So, that unintended consequence, or what we call underserved, will continue to be underserved because no one will be able to do a loan for them.
And I think hopefully that will straighten out a little bit too. I just think that so much of the creativity and so much of the negotiation has been removed out of our industry to the bad side. And so you take a client, let's say you have a client that comes in and says, I've got 3 rental houses, Jeff, and I want to do them all at one time. So, would you be willing to, cut me a little deal on the fees to have the whole package? And before, you would say, well, heck yeah. Instead of making a point on each deal, I'll do it for 3/4 of a point on each deal because at the end of the day, I'm making more money. And it's not a lot more work, and a lot of that creativity has been taken out of our hands now. So I think the unintended consequences is a huge deal, and you already see in California and some of the laws in terms of percentage of high cost loans, and so if someone calls me now for a loan that's $75,000, I can't do it. I mean, just the title and escrow fees and the lender fees alone, get you up and above where the law allows us as a percentage basis to do it, and this is only going to get worse, and yet. We're in an industry that's trying to create more first-time buyers. We're trying to get people in the game, and they don't come in and buy $300,000 and $400,000 houses. They come in and buy $125,000.
It's interesting too because really, when you think about it, those individuals that are buying those low-level homes, they actually need the most hand-holding.
Yeah.
And they actually need the biggest advocates on behalf, which is basically us, our mortgage loan originators, our mortgage brokers that work on a daily basis in those communities. Not the ones that work for the biggest banks, because let's face it, a lot of times they don't give the time of day. Again, if Bank of America has taken 90 days to refinance a home, are they really going to give the time of day to your first-time home buyer that's buying a $100,000 mortgage?
Yeah.
No, they're not. And again, what we're looking at is there's a function out there called disparate impact, which unfortunately, when they look at different rules and regulations and how it affects a certain part of a community or a protected class, et cetera. And unfortunately, this is going to fall into place, kind of alluding what I said before about the whole pendulum swing.
Yep.
The pendulum swinging to the other side.
Now let's talk real quickly, and then we're going to have to let you go. Let's talk about some of the things that Camp is doing, or some of the items related to credit, because credit is one of the biggest issues we've got, and that's misreported credit, erroneous credit, old medical bills that are floating around forever. So what is your organization doing, or what are you seeing out there that will help the consumer get an accurate reporting of their history?
Yeah, so Camp, and actually on the national side, the National Association of Mortgage Brokers, were on top of there's actually a Senate bill and a House bill called the Medical Debt Responsibility Act. And basically what it states is that if you're a consumer and you have a medical payment or medical debt on your credit report that a lot of times does not get seen or even viewed by the consumer until their credit is pulled.
Right.
If it's $2,500 or less, if you pay it or you settle it, the credit report agencies have to remove it within 45 days of once paid or settled. And those of you who have been followed into the circumstance before knowing that, unfortunately, when these things show up, it can really negatively affect your credit. So what this bill allows them to do is get it removed from your credit report, which instantly basically increases your credit scores.
Very good. Well, CAMP is CAMP, California Association of Mortgage Professionals. If you are interested in what they're doing, you can find their website. If you're in the industry and you don't belong to CAMP, I highly suggest you at least check it out, because they are a group that's out fighting for you and keeping up to speed. So, Fred, I appreciate your time very much this morning on a Saturday. Good information, and maybe we'll catch up with you down the road as more things change.
Sounds good, Jeff.
All right, Fred, have a great day.
Thank you.
Very much.
Bye-bye.
Very good. And we had a couple people on hold. If you were on hold there, I apologize. Give us a call back. Well, there was a couple people who had some questions about buying a house, so we'll do that. Any more quiz questions, or are we doing all right?
We do have another quiz question. We're talking about, Uncle SMS from Thailand is serving a 20-year prison term and has recently died. But the prison term, why was he in prison? Uncle SMS.
Uncle SMS. This guy is famous, and is it in Thailand? Bangkok, Thailand?
This is in...
Yeah, I think it was Thailand.
Bangkok, yep.
Bangkok, Thailand. So this gentleman was put in prison for 20 years. He passed away recently in prison. What was his crime? What did he do that cost him...
And how did he do it, if you can get that?
Yeah, what did he do? Uncle SMS might be a hint there. 339-1140, 1-800-920-1140. You can text us at 44-1140. I've got a Hellwig gift certificate. If you want to go up to Hellwig for their Friday night concert series, you can do that. Got some Gym Boys. Got some, what does that mean? Oh, some River Cats. Was that you trying to swing a baseball bat? You are HDHD or whatever that thing was. She's left-handed. This is Talkin Money. We'll be
right back.